Hello and welcome. Before we start, please subscribe to our YouTube channel for news and updates. Hello, I'm Marco Lima. Thank you for joining me for our monthly market update. Each month, we take a step back from the daily headlines and focus on the economic and market trends that matter most to long term investors. June closed another strong quarter for financial markets, but it also reminded us that volatility never completely disappears. Investors continued to navigate higher interest rates, persistent inflation concerns, geopolitical uncertainty, and changing expectations for Federal Reserve policy. Despite those challenges, the U.S. economy remains remarkably resilient. Corporate earnings continue to support equity prices, and we believe patient investors continue to be well positioned. During the first half of the year, U.S. equity markets continued their impressive advance. The S&P 500 has gained roughly 10% year to date, while the Nasdaq Composite is up nearly 13% thanks to continued strength in technology and artificial intelligence. The Dow Jones Industrial Average has advanced close to 9%, and encouragingly, smaller companies represented by the Russell 2000 have also participated in this year's rally. One important development during June was that market leadership broadened. Earlier in the year, performance was driven primarily by a handful of mega-cap technology companies. More recently, we've begun to see strength expand into industrials, financials, healthcare, and selected small cap companies. That's typically a healthier environment because it reflects broader investor confidence. Meanwhile, the bond market experienced increased volatility as Treasury yields moved higher. The 10-year Treasury finished the month around 4.4%, while the 30-year Treasury briefly traded above 5%. Although higher yields create short-term pressure on bond prices, they also provide investors with some of the most attractive income opportunities we've seen in more than a decade. Turning to the economy, conditions remain constructive. Inflation continues to move lower, although it remains above the Federal Reserve's long term target. The labor market has moderated, with unemployment around 4.2% and job creation slowing from the exceptionally strong pace we experienced over the past 2 years. Importantly, slower hiring does not necessarily signal recession. Instead, it suggests the economy is transitioning toward a more sustainable rate of growth after several years of extraordinary expansion. The Federal Reserve continues to monitor inflation carefully. While investors hope for interest rate cuts later this year, policymakers remain focused on ensuring inflation continues moving toward their objective before easing monetary policy. Consumer spending remains healthy, corporate balance sheets remain strong, and overall economic activity continues to support our constructive outlook. Looking ahead, our attention turns to second quarter earnings season. Corporate earnings will likely become the primary driver of market performance over the coming weeks. Investors will be looking for confirmation that earnings growth can continue to justify current valuations. We'll also be monitoring inflation reports, Treasury yields, Federal Reserve commentary, and geopolitical developments. Artificial intelligence continues to represent one of the most significant long term investment themes of this decade. However, investors are becoming increasingly selective, rewarding companies that demonstrate measurable revenue growth and improved profitability rather than simply discussing AI initiatives. From a portfolio perspective, we continue to emphasize diversification, high quality businesses with durable competitive advantages, and attractive opportunities now available in investment grade fixed income. At MRA Advisory Group, we believe successful investing isn't about predicting every short term market movement. It's about building disciplined portfolios designed to achieve your long term financial goals while managing risk through changing market cycles. Periods of uncertainty are normal. History has consistently shown that investors who remain disciplined, diversified, and focused on their long term objectives are typically rewarded over time. Thank you for watching this month's market update. If you'd like to review your investment strategy or receive a complimentary second opinion on your portfolio, we'd welcome the opportunity to speak with you. I'm Marco Lima on behalf of everyone at MRA Advisory Group. Thank you for your continued trust, and we'll see you next month. Stay calm, stay invested, and let us know if we can assist you further. Visit mraadvisory.com to learn more and schedule a conversation with one of our advisors. Thank you for listening. For additional information, please visit our website